Oh, there's so many yummy vegetarian options out there. You could try like lentil soup, veggie burgers, tofu stir fry. The possibilities are endless. Hey everyone! So, if you're running a small business here in Canada, you know that figuring out your deductions, well, it's not just good to know, it's absolutely crucial for your bottom line. Today, we're going to demystify the whole thing, and we'll do it by looking at the official guide from the CRA itself. Okay, but before we jump into the rules and forms, let me throw a question at you. Could you actually deduct extra food as fuel for your body? I mean, it sounds kind of wild, doesn't it? Well, believe it or not, it's not just a hypothetical. It actually happened. There was this really interesting court case with a self-employed foot courier. He argued, look, my job is crazy physical. I need more food than the average person just to do my work. And you know what? The Federal Court of Appeal actually agreed with him. They said, hey, if fuel for a car is a legit deduction, then in this very specific situation, a reasonable amount of extra food, fuel for the body, is too. It just goes to show you the rules can have some surprising twists, and that's exactly why we need to dig in and understand them. Okay, so let's get practical. Here's the game plan for today. First, we'll cover the big one. What actually is a genuine business expense? Then I'll introduce you to your new best friend, your roadmap, the T2125 form. After that, we'll dive into the key deduction categories you need to know, tackle that tricky mixed use minefield, and finally, make sure you know how to stay on the right side of things. All right, first things first. What's the number one rule for every single business expense? Well, it all boils down to one simple but super important principle. And that principle is what's known as the onus of proof. Honestly, if you get this one concept, everything else just clicks into place. It means the burden is on you. The CRA doesn't have to prove your expense was personal. Nope. You have to prove it was for business. You're the one who needs the receipts, the notes, the evidence to show that you spent that money for one reason, to earn income. Now, I know what you're thinking. Proving everything? That sounds like a ton of work. But here's the good news. The CRA doesn't just leave you hanging. They actually give you a roadmap. It's called Form T2125. And seriously, don't think of it as scary government paperwork. Think of it as your guide.
So this is it, the statement of business or professional activities. See all those lines? Each one is basically a signpost pointing to a potential deduction. We're talking advertising, supplies, meals, insurance. It's all there. So for the rest of our chat today, we're just going to follow this map, line by line, so you can see exactly how this works in the real world.
Okay, let's start our tour. We're going to jump right into some of the most common and, yeah, often the most confusing expense categories you'll see on the form. And let's kick things off with a big one that affects pretty much everyone. Meals and entertainment. You know, taking a client out for lunch, grabbing tickets to a game to build relationships. It's all part of doing business. But there is a very, very specific rule you've got to follow. And that rule comes down to one number, 50%. That's right. As a general rule, you can only deduct half of what you spend. But, and this is a big but, that's not the whole story. There are some really important exceptions where you can claim way more. And these exceptions are where you can really save some money. For example, you can claim 100% for things like staff parties. You get up to 6 of those a year. Or if you're at a conference and the meals are included in the ticket price, that's 100%. Same goes if you bill a meal directly to a client and they pay you back for it. Knowing these little loopholes isn't cheating, it's just being smart about maximizing your claims. Okay, moving on down our roadmap. Next up is another really important one, interest and bank charges. I mean, tons of businesses use loans to get off the ground or just to manage cash flow, right? Well, the interest you pay on that debt can often be a deduction. But, and there's always a but, you got to check a few boxes first. The CRA is going to ask, 1, was the money borrowed specifically to help you earn income? 2, is the interest rate reasonable? And 3, this is the big one, can you actually trace where that money went and show it was used for the business? If you can't draw a direct line from that loan to your business operations, then you can't deduct the interest. Simple as that.
And that idea of tracing brings us perfectly to what I like to call the mixed-use minefield. This is probably one of the toughest spots for any small business owner. We're talking about your cell phone, your car, your home internet, all that stuff you use for both work and your personal life. So what do you do?
Well, the rule is actually pretty straightforward in theory. You have to draw a line in the sand between business and personal. You can only deduct the percentage of that expense that was actually used to earn income. The personal part, that's on you. So think about your car. If you can prove you use it 70% of the time for business meetings and deliveries, and 30% for groceries and weekend trips, then you can deduct 70% of your gas, insurance, and repairs. So the million-dollar question is, how on earth do you prove that business portion? Well, even the T225 form reminds you to only put in the business portion. And your single best tool for this, it's so simple. Just make a quick note on the receipt the moment you buy something. Lunch with Jane to discuss the new project. Coffee with Mark to pitch the contract. It takes 2 seconds, but that little habit is your absolute best defense if you ever get audited. And speaking of audits, that brings us to our final and maybe most important topic, staying on the right side of the CRA. Because look, following the rules is pretty simple when you know them, but the consequences for, let's say, not following them, they can be really, really serious. And I'm not just trying to be dramatic. This isn't theoretical stuff. This quote right here is from an actual CRA report. It's about a business owner who got caught trying to write off things like construction costs for their personal cottage and even a family fishing trip. They tried to pass it off as a business expense. The CRA found out, and, well, it didn't end well for them. And please, don't think you can just fly under the radar. The CRA has a 95% conviction rate against tax evaders. 95%. Let that sink in. The risk is just absolutely not worth it. But look, the point of all this isn't to scare you. It's actually to empower you. Because the solution is so incredibly simple. Your best defense, your bulletproof shield really, is just keeping good, clear records. That's it. So I'll just leave you with this one final thought. If you got a call from the CRA tomorrow morning, would your records be ready for them to take a look? Making sure that answer is a confident yes is one of the single most important things you can do for the future of your business. Thanks so much for tuning in.